everybody. Welcome to the Trading Market Technicals Morning Call video for Thursday, January the 10th. Well, we did have an update following our two-day decline, which was very light. Light on volume, light on activity. We did get a little bit of a gap up early in the morning, and we actually started to fade that gap again on very light volume. We did ended up with some positive numbers. Let me just give you those numbers. Nasdaq up 13, S&P up 3, and Dow up 61. But really, again, guys, nothing has happened here. It's very slow. If you look at the 10-minute chart here, you could see that the market had that big, large gap up on that fiscal cliff, and nothing really has changed technically. Now, the thing what I'm going to be looking for is where do we go from here on this range? Or do we break out of this range? And I could just extend this, and you can see what I'm talking about. Very difficult for traders to make money here if they're trying to push themselves in trying to make a dollar, and not feasible. So obviously, there's always money to be made, but the thing is, we got to measure the risk with the reward. And when you have a gap up and a small little follow through, and then all of a sudden market just fades the rest of the day, it's hard to be short, to try to fade that rally, because there is no volume, and you never short a dull market. And we're at this range. So really, technically, last Friday's high is what I'm looking for a breakout, for a continued rally. And really a break below the 20-day moving average on a daily chart of the S&P, which I'm going to show you. The indicators, again, I'm not even going to show them to you tonight because nothing has changed. So I'm going to run right into the charts. It's going to be a very short video, but I'm going to give you an example of what we're looking for, and this range is really what I want. I want to either break below to really start at least to fill the gap, and or a break higher. Now, gaps don't need to be filled immediately, guys. It could be months before we fill this gap, and it could take a run for it. Now, remember, the longer-term structure of this market is bullish. I showed you weekly charts and monthly chart. Everything is in status quo for a bullish push higher for at least a test of the highs here. So keep that in mind, okay? Now, let's run into the daily chart. And you can see a lot of these patterns that we have are bullish patterns, inverted head and shoulders. Now, we are just hovering above here, this upper end of this range. And this Friday's high at 1467, a take out of this Friday's high would have us extend this rally from November from down here. This, no question about it. A break below the 20-day moving average of 1434. And yes, we are a few points away, 30-something S&P points. But that would actually start to convince me that we do have a top in place. Until then, the best thing to do is take profits quickly and keep your stops tight and manage your risk tight accordingly, because we don't know which way this market's going. I think there's further upside before the market goes lower. That's just me, just the way a lot of these risk currencies are acting. A way that a lot of the market is just not afraid. We need a catalyst for this market to roll over, and without the catalyst, you never short a dull market. The market will continue to drift higher and probably look to test the highs, and you'll get one big day like we had here, and then that'll be it, and then markets will follow along, and then we're going to have the retail guys come in and saying, wow, I missed this run, let me jump in, and then those are the long. When that happens, that's going to be when the market will turn around again. But as you can see here, we are overbought, but again, overbought is not a sell signal. So I'm looking for next Friday's high, a takeout of next Friday's high, okay, 1469, or a break below the 20-day moving average to confirm a short-term top. And that would be on a closing basis. Take a look at our 60-minute chart, and I want to show you again, inverted head and shoulders on a 60-minute, again, a bullish formation. 1513 is the target. We're at 1461. We are still a little bit over out of the way, but again, if you look at the 60-minute chart, what has happened in the last 5-6 days? We unwound our overbought. Same thing here on our RSI and stochastic, which is not on here. So that's something that you have to consider. And I know I listen to traders all day long. This market should not be up at this level. This market's not here. It's crazy. It doesn't matter. Price is what pays us, and that's what we have to follow. And I agree cold-heartedly, but I'm not putting my money where my mouth is here. I'm putting my money what my technicals are telling me. And right now, this looks like the market's going to continue to move higher. So even though I'm a little bit skeptical. So what I'm doing is, again, just day trading quickly, looking for trades. And if I don't see them, I'm not going to trade. I'm going to back off and I'm going to wait and see what happens and look for possible catalysts during the course of the day. It's just been very, very quiet. But now that earnings season's upon us, we are getting some small earnings this morning and some after the close. But really, the big numbers won't really start coming in until next week. But again, I'll keep my pallet dry for the next couple of days until that happens. Now, let's take a look at the SPY, which I like to show you volume. Again, what scares me always is this volume is just really absolutely terrible. Just really rolled over and hasn't really done anything. Again, daily chart here showing overbought readings. But this is really slightly bullish to neutral. When you're in a sideways consolidation up at the upper end of the range, to me, that is bullish. So I would not, again, be looking to short this market here. And I would like to see us take out Friday's high right here and or a break below the 20-day moving average on a closing basis on the spiders. And here's your numbers, 143 and 146.71. Real simple, guys. And in between here, and scalpers are having a field day on this next 6 days. Because if you're scalping for dimes, then you're having a field day. You're not worried about breakouts. And here, and I keep mentioning to you, energy is building. Energy is building. Look at what happened. Our 30-minute Bollinger Band. Energy is building. I mean, it's getting as tight as can be. It doesn't tell you the direction for the new guys that are following, but it does. Once it breaks out, that'll give you a cue where the direction's going to be, and more than likely you're going to get some good follow-through because having 6 days of consolidation is unwound. This market is ready to rock and roll one way or the other. I think it's going to run to the upside. Again, obviously anything could happen coming out of Europe, the FOMC, but to me it looks like that energy is building for another upside move before we move lower. And here, transportations. Here's another reason why you have transports here. Had a decent day yesterday. And I don't trade the transports, a very slow trade. But you could see, out of all of the other sectors that really didn't do too much, the transports did really well yesterday and continue to move higher. Again, leader, transportation sector, a big leader. Russell, another big leader, had a nice day yesterday. And as you can see here, starting to break out of Friday's high. And this high here way back in September, and a break above Friday's high, which we touched it yesterday. There's nothing wrong with this chart at all except volume is light. That's the only thing I'm worried about. We are overbought, but again, overbought is not a sell signal. Diamonds, Dow Jones, a follower, but again, guys, had a nice little day, and all holding up its upper end of the range. Okay, this is again very, very bullish. Now let's talk about Apple for a little bit. It looks like when Apple had a little hiccup way back in here, the market would follow. So it was actually kind of crazy when whatever Apple did, the market did, and that was kind of absurd. But now it's a little different, right? Market is saying, Apple has a little bit of problems or whatever the case may be, and a lot of these hedge funds and money managers are getting out of it. Now Apple's going to be posting earnings this month. I have a funny feeling, and again, this is has nothing to trade by. I think Apple, if they don't blow out numbers and they don't guide, which they usually don't, I think Apple's going to take a hit right down to this 473 area, 467 area, and that's going to be the spot where you're going to want to buy. But to me, Apple's a day trading stock right now, and as you can see here, it's in consolidation mode. But look at the daily chart; you'll see what I'm talking about. Can't get out of its own way. I think Apple's in trouble still. I would not even touch this stock. I would wait for at least 500, and if we broke 500, I'd have a tight stop, and that I wouldn't touch it until 475, 467, unless it started getting momentum and it had another catalyst of a reason why, a new product being launched, great blowout earnings and numbers, and they usually do. But let's see what happens this time. Right now, we have negative sentiment coming into this stock, so it's going to be really interesting to see what Apple does. Okay, and lastly, obviously the Qs. Qs, despite Apple has been holding in there, which is telling me technology is doing quite well, and it's staying exactly where it should be. So just something really to digest today. Again, I don't have much. There's nothing really to tell. I'm not going to fluff anything. Let's wait and see what happens in the next couple of days. Next week, we should be really We're going to be getting some real good numbers from technology, some banks, and that's going to really set the stage for either a market continuation rally or a market top, and we're going to have a little bit of a sell-off, and that's what I'm really excited about. Have a great day, guys, and we'll talk to you tomorrow. Take care.